Good morning, and welcome to episode 89 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, September 14th, 2022. Yesterday, the August Consumer Price Index information was posted, and it looks like we've got peak inflation again. Of course, the last peak is only good until the new peak. We stand at 8.3% increase over August of last year, staying right in line with 40-year highs in consumer price inflation. Of the numbers that compose that consumer price index, the food price inflation is the most disconcerting, much higher. A lot of folks thought that it would be gas that would be have the impact on consumer price number. Gas is actually a bit lower, and most of the heavy lifting on that high inflation index came from food prices. Of course, we all need food to eat. So that's a big concern. On the news, the Dow, the S&P 500, and the NASDAQ all tumbled for their worst one-day loss in over 2 years. The Dow fell 4.3%, S&P fell 5.2%, and the NASDAQ fell 3.9%. And the reason that occurred is a lot of people feel that with the high consumer price number that all systems are go for the Fed and Chairman Powell to go ahead and raise rates at their September meeting. The odds of them raising it a full percentage point, 100 basis points, as a result of this reading jumped to 22%. And that's where a lot of people think we're going. Of course, the number that many are kicking around is 50 to 75, but we'll see now that that big number's in. Let's take a look at the prices, and then I'll talk a little bit more about the impact of the food prices on that inflation figures. Last week, we were at 1704.10 for gold. This week, we're virtually unchanged, just up 90 cents to that 1,705 per ounce. Silver, big mover this week, up 7.3% to $19.58 per ounce from $18.25. Platinum up 4.7% to $907 versus $866 last week. Palladium up 4.8% to $2,192 per ounce versus $2,092 per ounce, up $100 over the week. The gold-silver ratio, the number of ounces of silver it takes to buy an ounce of gold, fell considerably to 87.47 from 93.83. Again, anything over 80 is still considered a strong buy signal for both gold and silver, signifying lower prices. And the US dollar index fell under a little bit of pressure this past week. It had actually gone lower, but it ticked up yesterday. It's at 109.41 versus 110.48 a week ago. Now, I mentioned the consumer price numbers, and the concerning part was the food. We are very close to a stagflationary environment. The only thing we're missing at this point is high unemployment. And depending who you talk to, we may already be there. Officially, we are not there. But we all have the other elements of stagflation. We have weak economic growth and persistent high inflation. Folks, this is the worst case scenario. Basically, all of your assets are falling down in value while everything you need to sustain life is moving up in price. So your assets are falling, what you need is moving up, and it's going to be harder and harder for you to continue the lifestyle you're in. And when you throw in eventually that third leg of high unemployment, now we have people losing their jobs in that environment. So it's not a good scenario we're heading into. You need to do your best to prepare, to protect your assets, and the time to do that is right now with a strong dollar and weak commodity prices. Gold and silver are on sale, as they have been for some time. you can kick it aside and scratch your head and wonder what's going on and sit with cash on the sideline, or you can do something about it and protect your portfolio, take advantage of these cheap prices. They aren't going to last forever. As always, we like you to go ahead and subscribe and like us on YouTube. Send us your comments and questions. Also, join our social media and sign up for our newsletters and alerts at Asset Strategies International. But whatever you do, don't forget that getting rich starts with keeping what's yours.